Time now for today's strategy session. Earnings season off strong with EPS and sales beats coming in higher than the historical average. That's according to data from Bespoke. So will strong earnings continue to power the bull market? Joining us now, we want to bring in Carol Schleif. She's BMO Private Wealth Chief Market Strategist. Carol, it's great to have you back here on Yahoo Finance. What do you think of earnings season so far? Is it enough to carry on this bull thesis?
We definitely think we're encouraged by some of the signs we're seeing, not only from earnings season, but also economically. It was a big data-heavy week this week for a lot of things, and it's very indicative of a stabilizing economy. But earnings, the nice thing is you're seeing a broadening in who's carrying the flag, if you will, on that. And so it's been interesting. You've seen the big Mag 7 stocks recommit to AI spending, which investors may or may not like, but clearly those big companies feel it's important for their future prospects. But you're also seeing a lot of good results out of smaller and mid-cap companies and other industries, the other 493.
Yeah, it's almost like 2024 was the test case for some of those companies who were announcing how much they were going to spend. And 2025 is kind of hey, just deal with it. We're going to be spending, and ultimately we are anticipating a massive amount of return on this CapEx, on this investment back into some of the AI instruments or build out of what our customers are demanding. But what's the timeline that they should be graded on for that actually returning into and turning into, I should say, some of the margins that investors are expecting as well?
Yeah, I think the interesting thing is the investment thesis is really shifting somewhat, which is very natural as we're building out the infrastructure, the backbone of something. Emphasis in the beginning, and this happened back in the 90s when we started building out the internet, because you had a lot of infrastructure built to begin with. That's where the investment focus was. Then the investment focus went on to the use cases of it. And so we've seen some of that shift in here in the last couple of weeks, where the interest is more in who's using the AI, how are they deploying it. You mentioned Pinterest earlier in terms of their use of AI in there, and you're hearing use case after use case. And so investors are starting to shift, and I think psychologically they're saying, that's great, you want to spend like that, you go for it, but we're going to go value somebody else for how they're using artificial intelligence and how they're actually deploying it to make the business run smarter, to focus on the productivity of their personnel, and to really take it up a notch.
Carol, I'm curious just how you're looking at the jobs report out this morning. The headline number was a miss, but once you look under the hood, there is the revisions that came in stronger than expected. We can take a look at the prior two reporting periods. How big of a relief is this for the market?
I think the market's relieved that it wasn't a surprise one way or another. You know, you did see some migration in that 10-year, which it basically just says, when you look at it, it's indicative of a solid employment market. It's in a lot better balance than it was a couple of years ago. You saw it in other jobs data earlier this week, the JOLTS data, where there's fewer quits. People are feeling like they need to hang on to what they have. There's a sense that the job market, especially for white collar workers, might be a little softer than the data show. But overall, the data shows an employment market that's in fine shape. It gives more ammunition for the Fed to just sit back and watch this thing play out, because there's a lot for them to model, a lot to consider, and they don't have to be in any big rush to cut further.
What's the portfolio strategy for investors who are going to be monitoring how long the Fed is just going to be sitting back and watching?
Well, I think a piece of it is for the first time in a very long period of time, you're getting paid to put some ballast. You're getting paid for the ballast in your portfolio, being short-term bonds and high-quality bonds. You don't have to stretch for yield. You don't have to stretch out the quality curve to get yield in your portfolio. And so that piece of Fed that's going to stay somewhat higher for a whole lot longer means that you can stay at that short end and not run the risk that significant cuts are going to deteriorate those yields. So there's that piece of it, but there's also the piece that a stable Federal Reserve and stable rates out there give businesses the ability to be able to plan, because they're not going up, they're not necessarily coming down, so they can just move ahead with plans. And there's a lot of optimism, I know, around the fringes in the business community, and we've seen that in a lot of the NFIB survey and things like that. There's optimism coming through about, maybe a lighter regulatory touch, more emphasis on M&A and a stable environment. So it creates a microcosm or a macrocosm, if you will, that allows businesses to be able to move forward.
Carol Schleif of BMO Family Office. Thanks so much for taking the time.
Thank you. Happy Friday.